high interest rates, the lowest affordability in 4 decades, home sales numbers are down, and a volatile economy. Why hasn't the housing market crashed yet? Well, stay tuned. Hi, I'm Teresa Wellman with Homeowner Experience Real Estate, and today we're getting into the market dynamics and helping you understand why the market hasn't crashed. So let's look at those factors that we need to know to be aware of what's going on. Here on my screen are some of the current headlines you see on YouTube all over. Alarming trends, U.S. housing market, cracks are forming in the housing market crash has begun, 10 warning signs of a housing market crash, the housing market looks like a bubble, 2008, all these people talking about fear of other markets that have happened in the past that they think are starting to happen again here in the future. Does the U.S. risk another housing market fail? There was this great article from JP Morgan talking through this, and the Market Watch is just saying again that the housing market affordability is the worst as it's been, like I said in the intro, in 4 decades. Yeah, the headlines are full of all of this news. So let's talk a little bit about what you should be watching to understand what's going on in the actual housing market, and then what the San Jose market looks like in those specific factors. So the housing market is a balance of supply and demand. It's an open market like many things, and depending on supply and demand, prices go up or they go down. So we've experienced here in the San Jose area a very short supply for many years and extremely short supply here in 2022 and really throughout the pandemic years. So that has really fueled our market and the appreciation that we've seen. But the big fear has been these rising interest rates. So yes, mortgage rates are up a lot. And with rates at 7%, the demand for homes has taken a hit, as you would expect, because the budgets for buyers has really shrunk. But that is because 75% of existing homeowners have secured interest rates of 4% or lower, meaning they're more likely to remain in their existing property. So that is putting pressure on our actual supply as well. So this housing supply is a huge factor that we're looking at right now, because yes, there are less buyers or less demand in the market, but there has been an extremely short supply that has continued to keep the market afloat, if you will. So we need to watch these factors, supply and demand, moving forward to understand if the housing market is going to crash or when we see signs that that might be happening. Are we there yet? Let's get into some more data. So last month in our video, we talked about interest rates and the market dynamics and how today's market compares to the 1980s, not 2008, but the 1980s, because there are a lot of social factors going on, such as the millennial generation compared to the baby boomers is the correlation we were making there with the 1980s. Interest rates, inflation, all of these market dynamics are very similar to the 1980s. So definitely take a look at that video if you missed it last month. So let's talk about where mortgage rates are today, even compared to our update last month and just in a historical perspective. So this is Wells Fargo mortgage rates published on their website as of November 7th. And now rates have improved. We were looking at the 7-year ARM previously was at 7.125%. We're seeing that at now 6.75%, and the 30-year fix is actually right at 7. Now, these are jumbo loans, which most buyers in San Jose are getting just because of our price point, right? So put that into perspective. What does this look like of 2021, where we were at 3% mortgage rate, up to 2023, where we're at 7%? The average home price in San Jose was 1.65 in 2021, and today it's 171. So yes, prices have appreciated despite this huge increase in interest rates. So here's the loan amounts and the mortgage payments and the total cost to own the average priced home in San Jose. Ouch, over $11,000 right now, 150% increase from what we saw in 2021. So yes, buyers can afford a lot less. Therefore, there are a lot less buyers into the market. Buyers have less urgency because they're spending so much money to realize their dream of owning a home that they're really stretching their budgets, and they are only going to be motivated on the perfect property match for them, right? And buyers are going to be money sensitive because they're spending so much money on their cost to own a home. So what is our supply and demand or sales look like in the San Jose housing market? Well, we're going to compare 2021 again to 2022 last year, and then again to this year. As you can see, 2021 to 2022, this is October's. Housing prices were very similar because if you remember mid-2022, the interest rates really started to go up. So you see a huge change here. We saw a big adjustment from early 2022 peak. We'll look at the charts shortly, down as interest rates skyrocketed. So prices did adjust about 25% from the peak to the trough in 2022. So this here is capturing some of that and then the slight recovery of back to those same prices. The biggest deal here is inventory increased in 2022 because things weren't selling as much. And the sales were lower than in 2021, which we would expect again because the affordability, yes, demand did make an impact. Now, if we look at that compared to today, inventory is actually lower than it was a year ago, about the same as it was 2 years ago, but sales are similar to where they were last year, not 2 years ago, right? Because that was much easier for buyers to afford. Therefore, the pace of the market is a little slower. You look at the days of inventory was only 2 weeks, which is unheard of in 2021. Last year, about a month, which is still a very healthy market rhythm. And today we're less than 1 month worth of inventory. So as you can see, the rhythm in the market is still at a very healthy number until we see over 2 or about 3 months worth of inventory sitting there. Well, we won't see a change in the prices in a negative impact. To the point, the market hasn't crashed yet because our supply and demand are still in a really healthy balance. And until that changes, we're not going to see any major differences. So just to put this in context, pre-pandemic, we would see 400 to 500 sales a month, even what we saw in 2021. But the supply was typically 700 to 800 homes a month. And we were seeing that 1.5 to 2 months inventory. We are just nowhere near those numbers that were considered healthy pre-pandemic. So here's a little bit more perspective of the San Jose housing market. Here's that bubble that I talked about when interest rates were low in 2022. And then as interest rates went up, prices really adjusted. But if we look back 12 months, that is in this shaded area here, we are way up. Actually, we'll talk about that on the next slide. Even amid the rising interest rates, right? So a year ago, we were in the 6s, we're at the 7s now. So we've still increased some, but inventory, as you can see, historically, this yellow line is extremely low and has been very low throughout 2023, which has kept our market afloat and prevented any market crash or price decrease. Now, sales are doing better. You see they popped up here in October closings. Pendings are healthy. They're the same as they've been the last couple months. So these are all signs that the market is still moving at a pretty good rate. Now, prices are up 8% in the last 12 months. And buyers, yes, it is difficult to afford at today's interest rates, but prices have continued to go up. Interest rates have gone in the wrong direction for you. So owning a home in San Jose has just got even more difficult over the last year. So if you can afford a home, you might consider getting in, even though it's difficult today, because as soon as those interest rates drop, the demand is going to skyrocket and there is going to be a lot more competition. And I don't foresee that supply drastically changing anytime soon. So the rhythm in the market could very well go back to what it was in 2021, where we were selling homes so quickly for way over asking. So these are all important factors to consider. If it is time for you to make a home purchase, let's talk about it. Let's have a buyer consultation and talk about your particular situation and timing and plan and see if now is the right time for you or if waiting makes sense. But there is a cost to waiting. As you can see, if you just waited the last 12 months, ouch, it's costing you a lot more. So sellers, what should you do? Well, prices are up in the last 12 months. And the threat right now is going to be inventory, or, how much competition comes on the market. Right now, we have very low competition. It is a strong seller's market with that rhythm of under 1 month of inventory. And so it's a good time to consider selling. What will 2024 look like? It's hard to say. So let's again talk about your particular scenarios and what you can do to be prepared to sell when it's right for you. Check out the link below to our seller seminar, where we've got a lot of great information we share just to start educating you on the home selling process. So what is the outlook going forward? Well, the housing market hasn't crashed yet because supply has been so low, even though demand has shrunk. So the risk factors that are going to cause prices to fall, well, here is what JP Morgan says. Existing home sales have come down a lot, but the activity has not come down because the market is struggling or that the bubble is bursting, but rather it's come down because people are just staying put. Inventory is so tight right now, and there will be some friction caused by the lack of affordability, says this researcher at JP Morgan. However, supply is very tight, and if mortgage rates remain high, we may see some gains get chipped away, but this still means that we will end up flat overall for 2023 moving forward. So right now we're still seeing an 8% increase year over year. Will we lose some of that? Possibly we could, because seasonally the prices do soften a little bit in the final quarter of the year. But next year is going to be interesting. Where are rates going to be? Where is inventory going to be? You must stay tuned, because I expect inventory to be pretty limited for a while. Prices are likely going to be fairly similar, and rates may improve, but likely not until the summer of 2024, and then only into the 6%. So it's not a drastic relief that maybe buyers are waiting for. So always come back to this channel to stay tuned to what's going on in the market. Thanks so much for listening. If you found this as great information, like our video, subscribe to our channel to stay up to date on the local San Jose housing market. I'm Teresa Wellman with Homeowner Experience Real Estate. Thanks for joining me.